Hello, everybody. I hope everybody's having an awesome weekend. This is 50 pips rocking and rolling on the 19th of July, 2015. Again, I'm not making trade calls or recommendations. You and only you're responsible for the trades you may decide to take, and the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on? First weekend where we're not in a while, where we're not having some huge you know, possibility of opening risk into the weekend with Greece news. So it should be a fairly calm open. You never know. We'll have to wait and see. Now I think we're going into an interesting week. Again, keep in mind, don't underestimate the Greek headline risk, but all in all, we should see some more focus also starting to turn back towards the more normal data points. I mean, Monday's likely going to be a fairly quiet day. We do have some CAD data, but we've got a lot of commodity currency data this week because we do have basically stuff out of New Zealand. We've got monetary policy meetings out of Australia. We're going to have basically those CPIs out of Australia. We've got RBA Stevens speaking. So, we do have an awful lot of stuff. Also with the rate decision out of New Zealand. On top of that, we do have continuing China data, and we do have, other stuff out of the UK, MPC rate votes. We've got retail sales out of the UK too. We've got retail sales out of Canada, unemployment out of the US, and then all the PMIs on Friday, China out of Europe too. So it's going to be an interesting week. And let's see what we've got shaping up for us. Now, I think one thing which we have to look at, really, we don't always look at it. People like to focus on Forex, but I think we have to take a look at the equity side of things, right? So we've been looking at this chart on DAX for quite some time, and it's very interesting here. We'll have to see how this behaves, right? But we're talking about the fact to keep a very close eye here on how we reacted on this upside channel, on this break into this level, because this could be a little fading opportunity, or at least if we were going to get a little bit of a retracement, right? Even if it was going to be a little bit of a retracement for then an ultimately break higher, right? This is the place where we'd expect some of the sellers coming in, right? If you look at it on a shorter time frame, like on a 1 hour or a 4 hour, you do see that sellers are trying to cap, and we've had some intraday shorting opportunities here. But right now, we'll have to see how we behave going into the open this week. Clearly, it's a very important level, so you would expect a healthy market or a healthy move to see any kind of failure and a trade back below this resistance to see a possible correction. That should get a bid and then break higher. However, just be cautious, because if we're still in ramp up mode and this continues to break higher, it doesn't necessarily have to look back at all, right? On an aggressive move higher, the first line in the sand I'd keep an eye out for is, of course, you've got these previous highs here. You had some sellers coming in there. You've got another level of resistance here, but it could get a very, very aggressive bid. So you'd want to be a bit cautious going into the week, right? In terms of something that's been ripping higher, I think pretty much one of the best examples of this is being the Nasdaq, right? Extremely aggressive move, right? No matter what time frame you look at this, we've had a very, very aggressive move higher through those previous highs, quite an aggressive rip. Now, if you're to put in some kind of some moving averages, the ones we usually look at here on the daily are the 50, 100, and the 200. You see how aggressive the move has been if you look at it on the weekly too, right? So it doesn't mean, keep in mind, it doesn't mean that this cannot continue to rip higher, but at some point, it would be healthy to see some kind of retracement. So going into the week, the way I'm looking at this in terms of bull bear line is, as long as we hold above that previous resistance, there's a good chance that this is going to continue to try and cause some pain to the upside, even if that means coming back down and then finding bids off that level for a continuation higher. But I'll be very, very interested, because if we can't hold this early on in the week, I would not be surprised to see a decent retracement. So that's what I'll be looking at, and fairly similar kind of action on the ES2, right? So we talked about the fact that on that initial press lower, you know, this was that gap down range, you know, the edge was trying to play this range, right? So getting long here, very nice move all the way back into those highs and tactically trying to get short into those highs, which obviously didn't work, you know, but the move to the upside clearly paid for the attempt to short that range high. Right now, you know, we're at a very interesting level, right? Keep in mind, you could see some kind of a parabolic move like you saw in NASDAQ. You do have a lot of resistance coming in here, right, into those, let's see if we can get this to show up, you know, 2120s, 2130s, right, all the way into maybe trying to take out that psychological 2150. But again, I'm still looking for the next big move or the next bigger move to be to the downside rather than the upside. So I have no urge to short, but I'm tactically looking for shorting opportunities, building swing shorts, and I still think sooner or later it will be healthy to see some kind of a 5 to 10% correction. I'm not stubbornly playing for that, but I clearly prefer to focus on trying to play that rather than trying to aggressively buy highs here, okay? Now, having said that, in terms of extreme moves, you know, we're seeing some nice continuation here on Euro-GBP. Again, there's no change in outlook here. This move's in play for a beautiful little symmetrical move all the way back down into, you know, that 150 extension, the 6720s. So we haven't changed that. We've been structurally bearish here for a long time, and the way we'd look at this, right, is as long as we hold below that 123 extension, those 7260s, you know, we would expect this to continue to try and make its way lower. Now, you know, is it going to just continue to move down without looking back in a straight line? It could. Seeing the current situation, it would not be surprising, but reminder, we like to play for what happens 80% of the time, not what happens 20% of the time, and we prefer to play for some kind of a healthy market. So don't be surprised if at some point, you know, in the coming weeks, you see some kind of a bounce, and then if it's going to continue lower, it will return lower after the bounce. I still expect to see a lot of selling into any possible rally here, but again, we don't like selling lows, but it still looks like it's in play to try and make this move all the way back into the 64.80, 67 range, and we would expect that a healthy move would mean a little retracement or some kind of retracement higher before coming back down, even though seeing the current situation, you know, we could see an extended move, an aggressive move. Now, another thing which I wanted to look at, which I wanted to discuss, and basically just to keep a heads up for this week, is Kiwi, right? Because we do have that rate decision. So keep in mind here, we're talking about the fact that we've had a very, very aggressive move lower here, right? And again, I would be cautious about trying to be stubbornly short into the rate decision. We have a lot of pain around the rate decision. So again, it could continue to go lower, but it may need to see some kind of retracement. Right here, of course, since we don't have a crystal ball, although some people probably claim to have one, we still don't know how this is going to react. Now, usually what you would expect is to see some kind of profit taking ahead of the rate decision. So if you start to see some kind of profit taking, you know, we could easily see a move right back into this previous support, which should act as resistance around the 6610s, or maybe all the way back into this channel high, which is 6680s, 67s. But all things being equal, bar any kind of shocking news out of the RBA, you'd expect any bounce, any retracement back into this zone to continue to find sellers to continue the move lower, right? The one thing I would caution you know, junior traders around is be careful. If we hold very, very heavy all the way through the rate decision and we break those lows on the rate decision and you don't see any follow through, that's a very, very classical sign, you know, some kind of fake out and exhaustion at lows, and then you start to see this kind of action. Then you might see the move higher, you know, react in a more aggressive fashion. So I would have no problem trying to sell rallies or try to look for tactical places to sell any rally here to continue the downtrend. I would have no problem to try and get long on breaks below here and failures to hold below here on the rate decision. I would be very, very cautious and personally not interested at all in trying to sell a break and try to chase the moves and extensions, right? I think there's better ways to spend your time, higher odds setups, even though it could accelerate. But reminder, nothing really, price doesn't tend to move in a straight line for sustained periods of time. So we just like to caution people and focus people on playing for what happens 80% of the time, not what happens 20% of the time, okay? And so those are some of the interesting charts here. I mean, the other thing which a lot of people are getting a lot of questions on is also the yen, right? And I just like to caution traders here, because you can make all kinds of scenarios here around what's happening, but you could also easily say that you see, these last two candles here on the monthly are pretty much, canceling each other out, right? So there's an awful lot of indecision here. Now, structurally speaking, this should continue to be a long, but the question is, do you really want to get long in highs? So I would tend to favor the assumption here that it would be healthier to see a bit of a pullback, even though it's probably going to end up rotating higher, and some kind of a healthy pullback. The only problem with the healthy pullback is I don't think the long is going to catch anybody by surprise, because pretty much everybody's seeing the BOJ, etc., expecting this to continue to grind higher. So even though the grind higher could be aggressive, could be violent, it's probably not going to surprise anybody, okay? What I think people could be surprised by the speed or the velocity of the retracement. Keep in mind that the retracement, all things being equal, should catch a bid, but it doesn't necessarily have to catch a bid every time it sells off 20 or 30 pips, right? So don't be surprised to see this retrace all the way back into the 120s, maybe even to the 117s in terms of extreme, right? That still doesn't mean the bull case is gone. That doesn't mean it won't catch a bid, but just be cautious. And usually when you start to get this kind of action, it's usually better to wait for a better place. Let this indecision play through. Let the market play to you. Let the market come to you on breaks around this level, on choppy activity. Don't try and force it inside this range, right? If anything, you might find some kind of edge at the extremes of this choppy area. But right here, right in the middle, I just don't think there's an awful lot of edge, okay? Now, so those are the charts I think that are pretty much most interesting charts here. We've got some, Euro. We've talked about that so much. Similar comments apply to what we've said about other ones about nothing moving in a straight line. It would be healthy to see some kind of retracement, even though it's probably going to continue to hold a heavy tone. I think cable is possibly a lot more interesting here. Now, we had a very nice little shorting opportunities at the end of the week, right, on that Carney, and I talked about it on Twitter again. You have to be careful trying to trade the headlines. There's not an awful lot of risk. The fact that, we know what happened last time Carney came out talking about rate hikes, that set up for a beautiful swing short, and it's the same thing when he came out this week. He didn't exactly come in and say, hey guys, I'm raising rates tomorrow, right? He talked about seriously focusing on thinking about or possibly, at the end of the year, right? Not today. So, remember, it's July, right? So it gave us a very nice opportunity to fade that into the end of the week to play the short side. Again, structurally, this should continue to hold a bid. I think if you're trying to get, as we've discussed a lot, if you're trying to get structurally long GPB, the safer play, or, just even in terms from a macro point, it makes a lot more sense to play GBP strength against the euro than necessarily around the USD, because it'll probably be a lot choppier, right? So again, you can express your trade through a different chart, and usually, especially if it's a swing trade, you'd want to express that through the chart, which will tend to be the less choppy, right? And in that case, as we've been talking about for a long time, Euro-GBP is a lot less choppy, also because what's happening on the euro, the flows should be a lot steadier. So here we could easily see a lot of chop. I mean, the chart, you've seen it, we've all seen it, it's on the blog. These are the bull bear lines. I think you can easily make a case for some more downside. You can easily make a case for a lot more upside. I think both, if you're trying to play GBP or USD, there are other charts which are a bit more interesting here, and this would be more interesting just for intraday plays at the moment. So we'll have to see how this breaks, okay? So guys, again, I want to keep these relatively short because I don't want the upload time to be too long. Thanks for listening, and as always, thanks for following. Have an awesome week. I'll post this and see you guys on Twitter this week. Have a great one. Thanks a lot. Bye bye, guys.